In 1929, Joseph Kennedy made 3 specific trades 6 months before the crash. He converted to cash. He bought gold. He positioned for volatility. When the market fell 89%, Kennedy made $50 million while everyone else lost everything. In 1987, Paul Tudor Jones made the same 3 trades: cash, gold, volatility. On October 19th, when the market fell 22.6% in a single day, Jones made $100 million in that one day alone. In 2008, Michael Burry, John Paulson, and others made the same 3 trades: cash, gold, volatility. They made billions while the financial system collapsed. And right now, in 2025, Warren Buffett, Ray Dalio, and Bill Ackman are making the exact same 3 trades. Not 2 trades, not 5 trades, 3. The same 3 that have worked before every major crash in the last century. These aren't random strategies. This isn't luck. This is a mechanical pattern that repeats because crashes follow the same sequence: extreme valuations, excessive leverage, a triggering event, forced liquidation, panic. And the investors who see it coming make the same 3 trades every single time. Let me show you exactly what these 3 trades are, how they've played out in 1929, 1987, 2008, and why they're happening right now in 2025. Because understanding this pattern gives you a choice. You can ignore it and hold through the crash like most people do, losing 30 to 50% or more. Or you can recognize where we are in the cycle and position accordingly. The 3 trades have been made. The pattern is repeating, and the crash is coming. Let me ask you something simple. Why do the richest investors in history always move before everyone else even knows something is wrong? It's not magic. It's not luck. It's not some secret phone call from the Federal Reserve. It's because they study patterns, not headlines. And once you understand how this pattern works, you'll never look at markets the same way again. Because crashes don't come out of nowhere. They build slowly. They warn loudly. And the people who pay attention, they make moves that look crazy at first and genius later. This is where the 3 trades begin: cash, gold, volatility. But to understand why these 3 trades matter, you need to understand how a crash is born, step by step, like a story that repeats in every decade. So let's break it down in the simplest way possible. Every crash starts with one quiet idea: this time is different. People said it in 1929. They said it in 1987. They screamed it in 2008. And today in 2025, they shout it louder than ever. It always begins with confidence, slow at first, then excitement, then hype, then full-blown madness. Whenever people start believing markets can never fall, that's when smart investors start whispering, "Okay, time to exit." But the crowd? They don't hear the whisper. They're too busy celebrating rising prices. In every bubble, people stop asking if something is worth the price. They only ask, how far will it go up? That's when danger begins. Because when nobody questions prices, bubbles grow faster than they should. And bubbles always in the same way. Now here's something most people don't understand. A bubble alone isn't deadly. What makes it deadly is leverage. Leverage simply means buying with borrowed money. You put in $10, you borrow $90, and you buy $100 worth of stocks. This is what people did in 1929 to 90% margin debt 1987, synthetic leverage from program trading 2008, the entire housing market built on borrowed money 2025, record margin debt, record corporate debt, record government debt. Every crash begins with a simple question: what happens when people who borrowed money can't pay it back? The answer is brutal. They are forced to sell. And when forced selling begins, it doesn't stop until the market hits the floor. Smart investors know this. That's why they act months before the crash. They don't wait for the fire. They move when they smell the smoke. And the smoke always shows up in the same place: valuations. When prices rise too fast, too high, too far from reality, the smartest money starts packing its bags. Not tomorrow. Not next month. Now. Here's where the first trade comes in. Trade number 1. Convert to cash. Early and quietly, you might think. But boring is exactly what saves people from disaster. Cash is not exciting. Cash does not make headlines. Cash does not make you rich in a bull market. But cash does one thing better than anything. It protects you when everything else collapses. That's why Joseph Kennedy exited months before 1929. That's why Paul Tudor Jones cut exposure before 1987. That's why Burry and Paulson raised cash before 2008. And that's why Warren Buffett is sitting on $325 billion today. Cash is oxygen. When the building catches fire, everyone else suffocates, while you walk out calmly. But here's the real reason the richest people love cash. It's not just protection, that it's positioning. Cash equals the power to buy everything at 50% off later. This is why Buffett always says, cash combined with courage during a crisis is priceless. You cannot buy at the bottom if you don't have cash at the top. But most people do the opposite. They stay invested 100%. They ignore the warning signs. And by the time the crash hits, it's too late to raise cash. Smart investors choose cash now, not regret later. Now let's talk about the second trade. Trade number 2. Buy gold. The shield against panic. Why gold? Simple. During every crash, governments and central banks do one thing. They print money. They printed money after 1987. And in 2020, they printed more money than any moment in human history. And what happens when governments print too much money? Cash loses value. Dollars become weaker. Currencies fall. But gold doesn't care. Gold does not rely on governments. Gold does not default. This is why the richest people always buy gold before a crash. It's not because gold makes them rich. It's because gold keeps them rich. Kennedy used it in the 1930s. Central banks are buying record amounts today. Why? And when the Federal Reserve turns the money printing machine back on, gold will surge. Smart investors know this. Gold is protection against the future mistakes of governments. Trade number 1 keeps you safe. Trade number 2 keeps your money strong. But trade number 3? Trade number 3 is the one that makes billionaires. Trade number 3. Bet on volatility. Profit from the panic. Volatility simply means when fear hits maximum levels. This is why Paul Tudor Jones made $100 million in one day. This is why credit default swaps in 2025 are exploding in price. Volatility bets are the closest thing to legal time travel. You get paid during the crash. You buy credit default swaps, you just need one done correctly. Most people don't even know these tools exist. And this is why, but it enriches the prepared. Let me paint the picture visually. Simple, clear, unforgettable. Step 1, prices get too high. People feel rich, they ignore risk. Step 2, leverage explodes. Everyone borrows money to invest more. Step 3, a small negative event hits the market. A default. A rate hike. A scandal. Doesn't matter what. Step 4, investors who borrowed money get margin calls. They must sell immediately. Step 5, selling triggers more selling. Step 6, panic begins. People dump everything. Good assets, bad assets, everything. Step 7, the crash happens. Too fast, too violent. But for those who made the 3 trades, the crash becomes the opportunity of a lifetime. Cash protects you. It's a complete system. Here's the part nobody wants to hear. We are in the same pre-crash setup today. Record corporate debt, record insider, selling, record leverage. It's the same movie. And once you understand the 3 trades, the smartest money has already moved. Buffett sold. Tech founders sold. Hedge funds hedged. Central banks hoarded gold. This means we're not early. Because the crash hasn't happened yet. You still have time to position yourself. Now that you understand how the pattern starts, in section 3, I'll show you the modern parallels and the warning signals flashing right now and how to use this pattern to protect yourself and potentially profit. You now understand how the 3 trades started, why they repeat, and how they protect the smartest investors in the world. But here is the part most people still don't see. We are living inside the pattern right now. Not next year, not someday now. And today's signals are even louder, bigger, and more dangerous than the signals that came before 1929, 1987, or 2008. This is the part where everything connects. This is the section that decides whether you end up safe and prepared, or shocked and unprotected like millions of people who always say, "I didn't see it coming." So let us walk through the warning signs that are flashing right now in 2025, signs so obvious that billionaires have already responded, but the everyday investor still hasn't. The first and most powerful sign comes from the same people who warned before every crash. Insiders, founders. CEOs. They have access to real data, not the sugar-coated numbers shown on TV. They are selling their stocks. They are raising cash. Here are the numbers. Warren Buffett holding $325 billion in cash. Mark Zuckerberg selling billions in Meta shares. Google insiders unloading shares month after month. CEO selling across the entire S&P 500 at the highest level since 2007. These people are not guessing. And when people who built trillion-dollar companies start to sell, not buy, you should pay attention, because the crowd buys at the top. But insiders? This one should scare you, because central banks only do this before a major currency or debt crisis. China is buying gold. Russia is buying gold. India, Turkey, Singapore, Poland, all buying record amounts. In the last 3 years, central banks bought over 3,000 tons of gold, the most in modern history. Why? Because they see a currency problem coming. Because they expect the dollar to weaken. Because they know inflation isn't finished. Gold is not just a metal. It is a vote of no confidence in the financial system. And when governments themselves are preparing for a currency shock, that means something big is coming. If you want to know what will trigger the next crash, look at office buildings in every major city. Here's the truth nobody wants to talk about. Offices are empty. Tenants are leaving. Buildings are losing value fast. And thousands of these buildings need to refinance their loans. But they can't. Why? Because they borrowed at 3% now. Refinancing requires 7% to 9%. Their income has dropped. Their buildings are worth less than the debt they owe. This is the exact same pattern that happened before 2008. But this time it is in the commercial sector, not housing. In credit default swaps on commercial real estate, someone is placing huge bets that these buildings will default. That someone is institutional investors. They are already making the third trade. Right before every crash, the market has the same emotion, overconfidence. People say, AI will save everything. The Fed won't let markets fall. Tech stocks can only go up. This time is different. If you hear these sentences in the real world, it should immediately remind you of bubbles from the past. In 1929, people thought companies would grow forever. In 1987, people believed computers made markets safe. In 2008, everyone believed home prices never fall. People believe AI changed the rules of money. But here's the truth. AI doesn't stop crashes. Technology doesn't cancel risk. Hype doesn't replace math, and the math right now is dangerous. The Buffett indicator, a measure of total market value versus GDP, is at 185%. That is higher than 1929. It means the stock market is almost twice the size of the economy. Debt is the silent killer of every financial system. Corporate debt at record highs, student loans back in repayment, housing affordability at worst level in history, and when rates rise, that snowball becomes an avalanche. Smart investors see it. This is the sign Wall Street understands best. When big money expects a crash, they don't send emails. And this is what's happening. Massive put option buying, huge VIX call purchases, credit default swaps jumping in price, hedge funds creating short-term disaster hedges. These are not casual bets. These are multi-billion-dollar positions created by Renaissance Technologies, Bridgewater, Pershing Square. They are not hedging the next 10 years. The same timeline that existed before every major crash. This is always the final warning. Before the 2008 crash, people were confident. Before the dot-com crash, people were confident. Before the Great Depression, people were extremely confident. Confidence doesn't prevent crashes. Confidence causes them. Because when everyone believes the market is safe, they take on more risk. And that's when everything snaps at once. Let us put it together in simple English. We are in the final stage before the next major crash. The three trades have already begun. Cash. Billionaires and CEOs are holding record amounts. Gold. Central banks are buying more than ever. Volatility. Hedge funds are loading up on puts and CDS. This means we are not early, that we are not guessing. We are not imagining patterns. And if history continues repeating, and it always has, then, but here's the important part, asterisk, you still have time. Not a lot, but enough. Asterisk, if you understand the pattern, if you prepare before the event, if you position yourself like the smart money, you can protect yourself and maybe even come out stronger than you were before. But you cannot wait until the crash starts. Because when the crash starts, when markets are falling fast, when panic begins, it will be too late. You cannot buy insurance during a fire. You now understand why the smartest investors always act early, why crashes follow the same steps, why 2025 looks almost identical to past pre-crash setups, and why the three trades matter. But in the final section, I will give you a simple step-by-step action plan, how to protect your savings in a crash, how to prepare emotionally so you don't panic, how to use the crash to your advantage, the three most important takeaways, and a closing warning you cannot ignore. But before I continue, you've now seen the pattern, that you've seen the signals, and you've seen how the smartest investors in history move long before the crowd even realizes something is wrong. But knowing the pattern is only the first step. The real question now is asterisk, what should you do? How do you protect yourself? And how do you prepare for the moment when fear takes over the market? Asterisk, because when the crash comes, and it will, most people will freeze. They will panic. They will make the same mistakes people made in every major crash. But not you. Not if you understand the plan I'm about to show you. Let's break it down clearly, simply, and in a way anyone can follow. Cash is not exciting. Cash does not feel powerful. Cash does not make you rich during a bull market. But cash becomes a superpower during a crash. Remember the rule. You can't buy at the bottom if you're fully invested at the top. That's why Buffett raises cash. That's why insiders sell. That's why hedge funds reduce exposure. Now, I'm not telling you to sell everything, but I am telling you that most people are dangerously overinvested, sitting 80%, 90%, even 100% in stocks, while the biggest warning signs since 2008 are flashing. A safe position looks more like 40-60% invested, 20 to 40% cash, 5 to 15% gold, 5 to 10% protection, hedges. This is not extreme. This is smart. Cash is not weakness. Cash is preparation. And when stocks fall 40%, your cash becomes 40% more powerful. Gold is not a get-rich tool. It is a stay-rich tool. Throughout history, empires rose and collapsed, currencies were created and destroyed, stock markets exploded and crashed, but gold stayed. Gold survived every crisis humans have ever created. And when central banks start printing money, which they always do during a crash, gold becomes your shield. Here's the simple truth. Gold protects your purchasing power when the dollar does not. And when you see China buying gold, Russia buying gold, Europe buying gold, India buying gold, U.S. banks quietly accumulating gold, hedge funds increasing their gold exposure, you know something big is coming. You don't need 50% of your portfolio in gold. Even 5 to 10% changes everything when currency falls and inflation rises. Gold is your seatbelt. You hope you don't need it, but you'll be grateful when the crash comes. Most people only learn about put options after a crash. But by then, it's too late. You must understand this rule, asterisk, protection is cheap before a crisis. Protection is expensive during a crisis. Protection is useless after a crisis. This is why the smartest investors place volatility bets early. You don't need complex credit default swaps like hedge funds use. You can do something simple. Buy puts on SPY, S&P 500, buy puts on QQQ, NASDAQ, buy small VIX calls. You don't risk your whole account. You risk a small amount, like insurance. If the market crashes, those small hedges can explode in value and cancel the losses on your regular investments. If the market doesn't crash, you lose a small premium. But that's fine, because you bought peace of mind. Just like car insurance. Just like fire insurance. You buy it because bad things happen fast. And markets fall much faster than they rise. This is the part nobody talks about. This is where 90% of investors fail. Because even if you understand the pattern, even if you prepare, even if you study history, you will still feel fear when the crash begins. You will see headlines predicting economic collapse, people saying, sell everything. Stocks falling 5% in a day, then 10%, then 15%, panic everywhere, friends begging you to sell, news calling it the end of the market. This happens every time. In 1929, people sold at the bottom. In 1987, people sold at the bottom. In 2008, people sold at the bottom. In 2020, people sold at the bottom. And they regretted it for years. So here's a rule. You must decide now how you will act then. If you wait for the panic moment to decide, you will make the wrong decision. But if you have cash, hold gold, have protection, understand the cycle, study the pattern, then you won't panic. You will stay calm. Because you'll know something the crowd does not know, asterisk, crashes always end. Fear always turns into opportunity. And bottoms are where wealth is created. This is where generational wealth is created. This is where the pattern rewards the people who prepared early. The fourth trade is not talked about as much as the first three, but it is the most important. Buy at the bottom when everyone else is terrified. This is how Kennedy became ultra-rich after 1929. Buffett made billions in 2008. Ackman made billions in 2020. Dalio built one of the biggest hedge funds ever. They didn't get rich during the crash. They got rich by buying after the crash. Here is the rule. When fear is highest, opportunity is also highest. Prices will fall to levels that seem unbelievable. Quality companies 40 to 60% cheaper, strong businesses trading below book value, real estate selling for pennies. Entire sectors collapsing temporarily. This is when you deploy the cash you protected. This is when your gold has risen in value. This is when your volatility bets have paid out. And now you buy everything strong, everything real, everything valuable. Not hype, not meme stocks, not speculation. You buy companies that survive. Microsoft, Apple, Johnson & Johnson, Visa, Coca-Cola, Google, Berkshire Hathaway, not because they are exciting, but because they are durable. Crashes are where millionaires are made. Recoveries are where those millionaires become wealthy, but only if you prepared. 1. The pattern always repeats because human behavior always repeats. Greed creates bubbles. Fear creates crashes. Patience creates wealth. This has been true for 100 years. 2. The three trades are not fancy strategies. They are survival steps. Cash protects you. Gold preserves you. Volatility pays you. And the fourth trade sets you free. 3. You must act before the crash, not during it. When the crash begins, it's already too late. The smart money moves early. The crowd moves late. The prepared move confidently. The unprepared panic. Which one will you be? You are not early. You are not imagining it. You are not guessing. The signals happening right now are the same signals that came before every major crash in history. And every day that passes without preparation is a day you lose positioning. You now understand the pattern. You now understand the signs. You now understand the plan. But knowledge only becomes power when you act. If this script opened your eyes, if you now understand that crashes follow patterns, if you now see what insiders, billionaires, and central banks are doing, then don't stop here. Subscribe, stay alert, and stay ready, because over the next 12 to 18 months, I will track every warning sign, every major insider sale, every bank stress signal, every volatility spike, every gold purchase, every red flag. And I will show you this crash unfolding in real time. Most people will be shocked, but you won't. You'll be prepared, that you'll be confident, that you'll know exactly what to do. Because the pattern is repeating. The three trades are active, and the next crash is coming. Prepare now, so the future becomes your opportunity, not your regret.